Hello and welcome to the look ahead for Tuesday, the 4th of February, with me, Fiona Singh-Kilter, Senior Market Analyst here at City Index. So on the economic calendar, we have quite a quiet morning as far as economic announcements in the European session are concerned. And in the US session, we have factory orders, JOLTS job openings. We also have Fed speakers, Daly and Bostic speaking, and then after the close, Apple will be reporting. But I think actually the main theme is actually going to continue to be the prospect of a trade war. It would appear that Trump may have fired the first shots after announcing over the weekend 25% tariffs on Canada and Mexico, and also a 10% trade tariff on China. These are to take place as from tomorrow. So we've had sort of retaliation from Canada and from Mexico, but there is this sense that they are looking to respond with trade tariffs matching Canada, certainly matching that of Trump. So there is a sense that this is potentially starting off a trade war. Now, obviously, that has plenty of consequences. Firstly, there are concerns what that might mean for global growth, for growth in the US as well, which has been pretty strong and resilient, but again, as well, growth in these other countries such as Canada, China, or Mexico. And then we've also got this idea of the inflationary impact that it could have on the US. Now, we know that the Federal Reserve left interest rates unchanged at 4.25 to 4.5% last week, and they were saying that there's no rush to cut interest rates further until the data shows that it's necessary. Now, if we're having inflationary measures such as trade tariffs, which companies could then pass on or are expected to pass on the costs to consumer, pushing up prices, then that obviously will create a headache for the Federal Reserve and potentially mean that they won't be able to cut interest rates as much as they wanted. It could potentially have a different impact on Canada, for example, where it could be disinflationary, and the same with the Eurozone, which has been threatened as well. So we will get into all of that very shortly. But let's just take a start by taking a look at the S&P 500. We've seen today's candle. We can see this here. This is the candle that we've seen today. I mean, it's a pretty steep sell-off, but it has recovered from those lows already. Now, so it went down to test that 59.20 low that it was testing last week. It's the 100 SMA. And as I said, also the low from last week, we have seen a recovery. Looks like it's trying to get back over that 50 SMA. Now, that's going to be really important. If we can get a close above that 50 SMA, that's going to be quite an encouraging sign that there really isn't much demand selling off at those lower levels. And we can see that by this sort of long lower wick. But we'll be looking to see whether that actually stays. And if we can get a close above that 50 SMA, then that does potentially pave the way for recovery back towards the 61,000. Obviously, this is sort of quite a lot of a knee-jerk reaction we're seeing from the markets. Whilst Trump had sort of suggested that trade tariffs were coming, the market was fairly relaxed that maybe there was going to be ways to negotiate around that. And I think that's why we're sort of seeing this fairly volatile reaction today. There was a bit of a sort of a relaxed attitude towards what Trump may be doing. But anyway, we're seeing there is also other things for the market to be focusing on this weekend. This week, as far as earnings are concerned as well. As I mentioned, we've got Alphabet, who are due to release earnings after the close tomorrow. But just to finish up here, if we do see an extended sell-off and we see a break below this level here, the 59.15, that's when we're seeing a lower low formed, and that could create a more extended sell-off towards the 58.50 support zone. Also, whilst we're talking about the trade tariffs, it's worth just taking a look at what's going on the euro, because that was threatened. The European Union was also threatened with trade tariffs by Trump. It does seem that they are coming, but we've definitely seen a recovery from that lower 102 level that we saw in play earlier today. Long lower wick again suggests that there's little selling demand at those lower levels, and we're back above that falling trend line now that dates back to October. There isn't any Eurozone economic data today due tomorrow, but I think we are still just going to sort of be keeping a watch out for any comments from Trump with regards to potential trade tariffs, as he did say that the European Union was in line for the next ones. As far as levels to be watching, if we get a close above this level here, which is the 103.40, that's the low that we saw in November, that opens the door to the 104 level, and again the 104.40-50 region. On the downside, if we get a close below that falling trend line, got the 50 SMA in there as well, then that could see a retest of that 102 level before we move lower to that 101.80 level. Just also definitely worth taking a look at what's going on in the US dollar loonie. Now, again, this has seen quite an interesting reaction. There's a very long upper wick there, suggesting that buying demand at those upper levels was not as strong. And that's why we've seen the sort of price come back down as well. And obviously, we've seen the retaliation between Canada and the US with the announcements of retaliatory measures. Now, just as far as the loonie is concerned, support to be watching on the downside, 144.60, something around there. On the upside, I mean, it's quite a long way up there, but I mean, 146 would be the natural next level ahead of 147 before we sort of look towards that 148 high that we saw today. It's not in overbought territory, so there is potential to see more on the upside. But again, as I said, we've got a couple of data points from the US. If we get any weakness in then we might see a little bit of a weakening as far as the US dollar is concerned. And then just finally, we also, as I mentioned, have some earnings from Alphabet. So we had obviously the Meta, Apple, Tesla, and also Microsoft last week. So that was the start of Magnificent Seven earnings. This week we have we've got Alphabet on Tuesday, and we also have Amazon on Thursday. Now, Alphabet's going to be reporting earnings as the share price trades pretty much at its record high, reached on Friday of $202 a share. Now, basically, what we're expecting is to see revenue rise around 12% to 96.6 billion compared to a year earlier, and earnings are expected to grow around 30% to 12.12 per share, up from 1.64. A lot of attention is going to be on Alphabet's cloud infrastructure business. Basically, AI has been increasingly important for Alphabet, especially after it's revealed its groundbreaking, universe-shaking quantum chip. But also the company's cash cow advertising will be front and center for the markets, looking out to see whether advertisers have ramped up their advertising spend in the lead up to the holiday period. Now, let's not forget, these earnings are coming hot on the heels of the DeepSeek announcement last week. I think earnings last week, we sort of saw a bit of a more relaxed atmosphere as far as what that cheaper AI model could mean, and that it was painted in a positive picture, and that sort of helped tech stocks recover, but not so much for Microsoft. Be interesting to see if we get a similar picture painted this week from Alphabet and from Amazon. So Alphabet tomorrow, if we just see it's trading up, it's been forming a series of higher highs and higher lows since 2023. It trades above its rising trend line. It's I was going to say levels to be watching, as it pushes towards 250 would be the next level on the upside to be looking out for. As far as support is concerned, 190. That's the level on the downside. Watch out for. That's the support that we saw in July, and it's also a level that sort of offered a little bit of support around the end of last year and the beginning of this year. So I hope you like everything that we've touched on today, and I look forward to seeing you again tomorrow.